Trading in cryptocurrency has become a global phenomenon and an enticing way to earn extra income. However, it can be a risky endeavor for beginners. Luckily, there are some tried and tested strategies that can help you succeed in the crypto market. Always remember that your portfolio's value is in fiat currency. Never leave your coins on an exchange. They can be hacked or otherwise lost. Buying Bitcoins is a way to buy into the cryptocurrency market. You can do this through an exchange which trades Bitcoins for traditional currencies like US dollars or euros. The exchange keeps track of your balance in those currencies, and when you want to sell, you can return your coins back to the exchange in exchange for your original investment plus any profits. While people have made money buying Bitcoins as an investment, it is important to remember that the price of cryptocurrencies can be volatile. In fact, some cryptocurrencies have plummeted to less than half of their value in just a few hours. This is why they are considered high-risk investments. The simplest way to purchase Bitcoin is through an online cryptocurrency exchange. This can be accessed via a website or dedicated mobile app. Most of these apps are free to use, but you will likely be charged a small fee when you make a transaction. In addition to the exchange, you will also need a digital wallet in order to store your purchased cryptocurrency. These wallets can be either hot or cold. Hot wallets are managed by the exchange and are accessible through an online browser or mobile app. Cold wallets, on the other hand, are stored with a third-party service provider and incorporate extra security measures to ensure that your assets are safe. When purchasing Bitcoins, it is important to consider the fees involved. These fees typically consist of a fee per trade and the cost to convert your fiat currency into Bitcoin. The fee per trade is usually a percentage of the total trade amount. Some users prefer to purchase their Bitcoin through a payment service like PayPal or a mainstream brokerage firm. These methods can be more convenient, but they come with a few risks, including the risk that your cryptocurrency will be stolen. Regardless of the method you choose, it is essential to research each one thoroughly and take caution when using unfamiliar services. You should never send your private keys to an unknown exchange. Moreover, you should always use a secure password for your wallet and ensure that it has two-factor authentication enabled. NerdWallet writers are subject matter experts who use primary trustworthy sources to inform their work, including peer-reviewed studies, government websites, academic research, and interviews with industry experts. All of NerdWallet's content is fact-checked and subject to a rigorous editorial review process. Selling. When you want to turn your Bitcoins into fiat currency, there are a few different options for doing so. You can sell them on an exchange through a peer-to-peer marketplace or at a Bitcoin ATM. Each of these methods has its pros and cons, so you should consider which one is best for your situation. The easiest way to sell your Bitcoin is through an exchange. This method is fast and convenient, but it comes with the risk of losing your money if you don't follow the rules. For example, some exchanges require that you use two-factor authentication to verify your identity and prevent you from selling to suspicious parties. Other exchanges limit the amount of time that it takes for you to withdraw funds from your account. This can be a problem for people who are concerned about money laundering and tax evasion. If you're a newbie to the cryptocurrency world, it may be confusing to figure out how to sell your Bitcoins. But the process is actually quite easy if you know what to look for. First, you need to determine what type of wallet you're using. This will help you determine how much value your wallet has and how much it's worth to someone else. You can also set your advertisements' opening hours to ensure that you're only showing it to people who are ready to buy. You can also set your advertising's minimum Bitcoin trading volume and the maximum transaction amount. This is a great way to protect your investment from scammers. Lastly, you can also set a minimum feedback percentage that users must have in order to contact your advertisement. Once you've selected a buyer, create an escrow. This is a secure online service that allows you to trade cryptocurrencies for money. Once the buyer has completed payment, you can release your Bitcoins. However, if you have any doubts about the buyer's identity or whether they've paid, you can always open a dispute and let local Bitcoins handle it for you. Beware of buyers who ask you to hurry or rush. They could be fraudulent. Trading. The best way to trade Bitcoins is through an exchange, which allows you to purchase and sell the cryptocurrency using traditional currencies. Many exchanges offer low fees and have a friendly interface. When trading, remember that Bitcoins are not backed by any government or central bank, so their value can fluctuate quickly. Additionally, trading positions are zero-sum, meaning that for every person who wins, someone else loses. Cryptocurrency trading can be profitable if you know the right strategies and techniques to use. The secret to success is to follow the markets closely, pay attention to news stories, and understand technical analysis. This will help you make informed decisions and minimize your risk. In addition, you should avoid trading bots, which are usually scams in disguise. One of the most basic Bitcoin trading strategies is to buy low and sell high. This strategy has worked well for many traders, and it is easy to implement in the crypto market. To maximize your profits, you should also diversify your portfolio by buying different cryptocurrencies. This will help you reduce your daily risk and increase your profit potential. Another way to trade Bitcoins is to follow the market's movement. This is a great way to learn how the market works and to take advantage of trends. However, it is important to remember that the market is not always right, and it is essential to have a backup plan in case of a loss. Another popular strategy is to take advantage of media coverage. News stories can have a significant impact on cryptocurrency prices, especially when they are negative. This is because a positive or negative press release can cause investors to rush in or out of the market. This can lead to price spikes and crashes. Hence, it is important to monitor the media closely and act quickly when there is news that can affect the market. You can find a lot of useful information about this topic on the internet. Investing. When investing in crypto, be sure to set limits for yourself. This means that you should never trade with more money than you can afford to lose. This is especially important because cryptocurrencies have a high risk of price fluctuations, which can lead to big losses if you don't manage your capital properly. One way to minimize the risks of investing in Bitcoins is by diversifying your investments. This means that you should invest in different digital currencies rather than putting all your eggs in one basket. This will protect you from losing all of your money if a particular cryptocurrency loses value. Another way to minimize the risk of investing in Bitcoins is to use a dollar-cost averaging DCA strategy. This involves investing a fixed amount of money each month into your preferred digital currency. It helps to remove the stress of trying to time the market and ensures that you always have some money invested in a currency even when prices are low. This is a good strategy for beginners who want to make consistent profits in the long term.